QuickBooks Online 2025. Enter purchase order, adding vendors and inventory items as we go. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 Project 5. We set up in a prior presentation opening the major financial statement reports. The reports located on the left-hand side. We're in the standard reports favorites section. Right-clicking on that balance sheet to open a link in a new tab. Right-click in the profit and loss, otherwise known as the income statement, to also open a link in a new tab. Let's go to that middle tab, close out the hamburger. We're in the modern view mode, which is the standard view these days. Scrolling up in that modern view mode to take the custom dates, ranging it from 01/01/25 to 02/28/25. It's refreshing automatically. I'd like to hit the display button, however, so I can select the drop down and see it in terms of dates, months. I want to see the months side by side. Closing that out. 25 of January and February side by side. Let's go to the tab to the right. Repeat the process. Hamburger needs to be closed. We want a custom date range. It's going to be encompassing the 2-month time frame. 01/01/25 tab, 02/28/25 tab. We would like to select the display, dropping it down, the dates, and the months. Okay, closing that out. And that is the process. Let's go back to the balance sheet. This time we're going to be entering a purchase order in order to request inventory. Let's take a quick look at our flow chart to get a reminder of what the purchase order does, when we would use it. So this is the desktop flow chart. We're just using it for the flow of the forms. However, we are in QuickBooks Online, but the flow of the forms is the same for most accounting systems in terms of the documentation actually used. When dealing with inventory, we always have to point out that as a bookkeeper, as someone working in the accounting field, you have the question, do you want to be dealing with inventory or not? How could you not deal with inventory? You pick up clients that don't have inventory. You go work for an accounting firm that's in a service industry and not inventory. Why would you want to deal with inventory? It's more complex because it's specialized, and you might be able to get paid more if you specialize in that area, having knowledge that others don't. That's going to be the options you want to be keeping in mind. If you're doing inventory in QuickBooks, the option is, do I do inventory in QuickBooks using a perpetual inventory system, tracking not only the dollars of inventory, but the units of inventory as we go, or possibly, such as in the case oftentimes of a Shopify store or an Amazon or something like that, we might track the inventory externally, possibly even in an Excel worksheet, and periodically update it in our software so that we have the financial statements correct on a periodic basis, possibly nightly, possibly weekly, monthly, quarterly, yearly. So at the least, we can fill out our tax return even if we're a sole proprietorship, having page 2 of the Schedule C requiring a cost of goods sold calculation, basically. That's going to be the idea. Now, we're tracking inventory in the system. If we track inventory in our system, the next question is, how do we get our inventory? Who do we buy it from, and how do we buy it? Do I have the ability to ask my vendor to ship me the guitar without paying for it? That's unusual for an individual. If I'm an individual, I can't ask an online retailer like Amazon to send me a guitar and I'll pay it once I check it out. Once it gets to my doorstep, if it gets past the pirates that are lurking right outside my door and I get it, then I'm going to open it. And then if it's the right color and everything, then I'll pay for it, maybe. That's not how it usually works with Amazon. They say it's yours once you buy it. And if the pirates steal it, that's on you. That's how it happens. But sometimes if we had the control, we'd be able to say, as a business, I'd like you to ship me the inventory. And then once I get it, then I'm going to enter the bill into the system. And that is when, and only when, you would have a purchase order. It's a request for inventory, not actually recording anything. The inventory not being ours at that point in time, and we having not yet paid for the inventory at that point in time. That's what we're doing now. We're going to enter the purchase order, and then we're going to get the inventory, the guitars, in a box. Hopefully they got past the pirates. It's tough these days. The world's getting to a dangerous place, man. Pirates are everywhere. But hopefully they get past the pirates, and then we enter the bill, and that's when we record. Now, as we enter this purchase order, we're also going to be adding the vendor and possibly a new item as we go. Our story is someone comes into our guitar shop and they're like, I want a guitar from Fender. And we're like, we don't usually deal with that vendor. You see it rhymes there? Fender, the new vendor. The new vendor, Fender, we don't usually deal with them, but we might be able to request from them. We'll try to get the guitar on your behalf. And that's the story we got. So now that's where we're going. So we're going to go to the purchase order, first tab, select the drop down, and we're ordering the purchase order. So we're in the vendors area because we're buying stuff. This is where money ultimately goes out for goods, services that we're buying for the purchase order. But no money's going out yet, even though it looks kind of like a bill. So this is going to be a new vendor called Fender. The new vendor is going to be Fender because it rhymes. And so we're going to say, enter that. I'm not sure I spelled it right. Now, for most vendors, we usually don't need all this other stuff like the email, the telephone number, the address, and so on when we're just trying to be paying our telephone bill, for example, or when we're just trying to pay our electric bill. But if it's someone that we purchase inventory from, we might need the email because we're going to be sending the purchase order to them. So we might need that at the very least, and would often have more information about people we buy inventory from than other vendors that we just pay for services like the telephone bill. But we're just going to have the minimum information for our purposes and then move on forward. Moving forward, people. Tab, 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 tab. So we have the open purchase order. Now we're going to ship it to us. So it's going to be coming to our warehouse and our address. However, you can imagine that we would want to be shipping it directly to the customer so that it doesn't have to come to us and then we send it to the customer. So we placed the order. They want them to send it directly to the customer. Then you could select a customer drop down here. But we're going to send it to ourselves, and we're going to have the date be 02/02/24. And tab, 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 tab. And then we're down here. We're not going to have a category typically because a category would mean that you're entering like an account. And that's not typical for a purchase order. We're going to be putting it into an item because we're going to be buying inventory, which needs to increase once it pulls into the invoice, not only the dollar amount, but also the units. Now, if we didn't track the inventory in the system, that's when you might possibly use like a category possibly in that case. But we're tracking the inventory. So we're down here. We're going to be entering inventory items, which we don't have any yet because we've never purchased inventory from the new vendor, which is called Fender in this case. So I'm going to add a new item on the fly. We're flying on a little fly and we're going to add it even with the flapping wings of the little fly. So we're going to add it on the fly. And then I'm just going to call it an SQ. It's going to be a Squire. And then it's going to be an inventory item. Inventory item. We could add an image if we had one. An SKU if we had a number to identify it. A category if we're making subgroups of categories. We're not here. Initial quantity on hand is always going to be 0, except when you first put the inventory on the system, right? When we first set up the inventory items. I'm going to put that as a date before my practice. I'm just going to put it January of the current year so the date doesn't mess anything up. And then the reorder point, I'm just going to say 0. So it will remind me to reorder the inventory asset account when we purchase it, not with the purchase order, but when we create the actual bill from the purchase order, that's when the inventory will go up. Sales description. All right, I'm just going to call it a Squire. SQ. Now, I'm not a guitar expert. I have like one guitar, but so the sales price, I don't know what they cost or anything, so there it is. So all the different types of guitars is not where my expertise lies, but we're in the practice problem of buying that one Squire guitar. It's a sale of product income. That's the income account that will be impacted when we enter the invoice, when we not purchase the guitar, that we're in the purchasing process, but when we sell the guitar on a perpetual inventory system. I'm going to pull the same name for the Squire down here. Is it subject to tax? It's the standard rate is the default. So we're going to have the standard rate for the tax implications. That's going to be sales tax, a type of consumption tax, which will be calculated using the sales forms when we make the sale, which will happen with either the invoice or the sales receipt, whether we are impacting accounts receivable or doing it in essence at the register. All right, so then we're going to go down here and I'm going to say the purchase is also going to be Squire. So when we purchase it, that's going to be the purchase order, but that's not the actual purchasing form. It's not recording anything. And then the other form that the purchase will either be an expense form or a bill form. 168, that's what we buy them for. The cost of goods sold is not the account that is impacted when we purchase them, because the account impacted when we purchase them is actually the inventory account that'll go up by the 168. The cost of goods sold is the expense account that will go up, reducing net income minus expenses when we sell it with an invoice form or sales receipt. In that case, we'll have the amount on the form charging the customer $244 plus the sales tax, and then we'll have the cost of goods sold recorded at the same time minus the 168 gives us the net profit. We can add the preferred vendor, which is Fender. All right, the rhyming's kind of messing me up now. I thought it was cool, but now it's messing me up. It's giving me a tongue twister. Anyways, we're going to put the Fender as the preferred vendor. Boom. All right, so we're going to scroll. So now I'm going to say that we have it recorded here, Squire, boom. I'm going to say that we're going to purchase 20 of them. So 20 times the cost of 168, that's not the sales price, that's the cost, is 3360, and then we've got the 3360 at the bottom. So there's our purchase order. What's this going to do to the financial statement? What's it going to record? That's a trick question, because the answer is nothing. It looks like it should record something. It looks like it would be increasing inventory, increasing then or decreasing the checking account or something like that, but no, because it's just a request form. Therefore, we're going to track it, but we're going to track it internally, not impacting the financial statements. Okay, so let's check it out. So we'll just record, save, and close this bad doggy, and it says select the date that's different. You started the tracking. I see what I did again. I tried to put it in there for 2024, but it wouldn't let me do it. It wouldn't let me make the mistake this time, so I'm going to put it in there for 2025. That's last year. You're looking at last year's thing, dude. Get in the present. Save it and close it. Let's try it again. All right. So then if I go into the expenses tab on the left-hand side, close up the ham boogie, we could go into the expenses tab in the expenses tab, and then we could select the drop down, and I want to look for the purchase order, purchase orders. And then if we wanted to filter those purchase orders, then we could select the status of the open purchase orders. That's the status. And for the last 12 months, that should cover us. If it's not, you can, adjust the date range if necessary. The payee and the category, we'll keep that there. And there's the one open purchase order that we have that we need to be entering, selecting the drop down. Once we get that inventory, what are we going to do? We can make a bill from it. So notice what will typically happen. Now they're going to ship us the guitar. Hopefully it gets past the pirates that are lurking right at the border. They try to steal the like the waterways or whatever, the trucks and stuff. That's where they attack. But if we get it past the pirates, then we're going to get the guitar and we're going to imagine that it has a bill in it. And then when we get the bill, we can enter the bill into the system. We want to compare the bill, what's on the bill and what's in the box, to what's on the purchase order. And if they match, then we could create a bill in our system from the purchase order. That would be the easiest basic thing to do. And that's going to be this conversion here, that we can make this purchase order into a bill, which will make the purchase order closed at that point in time. And then we can record the bill, which will actually put it on the books. Now we can also track the purchase orders by going to the vendors tab. And then we're in the purchase order. So here we're in the Fender. We got the one purchase order with the new vendor called Fender. And there it is. So now we have the purchase order in there so we can track it internally. Where we can't track it is on the balance sheet. If I go to the balance sheet and I refresh this bad doggy, refresh it there too. It's not in inventory. Inventory has not been increased because we're not responsible for it yet. If the pirates steal it, in theory, then it's on the other guy because we haven't paid him yet. Ha ha! It's on you. The pirates stole it. That's not really funny still because I would have rather had that. We bought the guitar. We wanted the guitar. But still, at least we're not liable for it because I didn't pay for it yet. But that's not how it usually works. I usually pay for it and then I get robbed. But I'd be nice if I could do it the other way. And on the profit and loss, if I refresh this bad doggy, no impact on the profit and loss as well. So let's just take a quick look at our trial balance once again. It's going to be the same as it was before because we haven't done anything new except enter a purchase order, which doesn't do anything to the reports. But just let's double check our numbers where we're at with the trusty trial balance. Don't type trusty, just type trial balance. Trial balance. And then we'll have the date range going from 01/01/25 to 02/28/25, selecting the drop down to see it in months. And there we have it. We got the balance sheet on top of the income statement. The balance sheet having assets going from the checking account down to the furniture and equipment. That's the accumulated depreciation contra asset account. Then the liabilities starting up the AP, the accounts payable, going on down to the payroll liabilities. Then we got the equity section starting at that point with the owner's investment or opening balance equity, that is, into the owner's equity. And then we got the income statement, billable items, service items, and then the expenses, the big one, the cost of goods sold. If you sell inventory related to the inventory that we're selling, and then all the other expenses down to the bottom of the other income and expenses, which is where we put the gain or loss in the sale of the investment, as well as the interest income, as those are not part of normal operations, but have to do with financing and a type of income that isn't part of our normal process of guitar sales. So we put it at the bottom for formatting's sake. For formatting's sake! That's why we did it, for formatting's sake.